Hello, everyone, and welcome to the April 16th regular Legislative Committee meeting of the Town of Vegreville. Call this meeting to order at 3:05. I'll be looking for a motion to accept the agenda. Councilor Rudick makes the motion. Is there any additions or deletions? Seeing none, all those in favor? Carried. Thank you. Next up, the adoptions of our last legislative meeting. Councilor Bullock makes the motion. Any errors or omissions within those minutes? Seeing none, all those in favor? Carried. Thank you. So our first up is Finance Minister Wall with a quarterly progress report. Go ahead, Manager Wall.
So the first item will be discussion of the paper statement fee that was implemented last year. Roughly, there are 2,373 utility bills that are generated each month. In 2021, of that 2,373, 2,319 bills were generated mailed, and only 54 were emailed. So last year, we got it down to 1,050 bills being generated and mailed, and 1,323 being electronically generated and emailed. The cost of printing each bill is, for envelopes, it's 0.163 cents an envelope. The utility bill paper, it's a special paper that is used and ordered, is 0.143 cents a bill. And Xerox printing, number coming straight from Xerox, is 0.0075 to print that. And postage is 92 cents. So the total input cost to mail a invoice, utility invoice, is 1.2335. Now that is just the material costs. There's also labor costs associated with that we didn't incorporate in that number. In 2023, 1,323 bills were emailed a month, times that by 1.2355, brings it to $1,632.92 a month, times that by 12, and we'll have $19,583.04 saved by doing the emailing. Obviously, that doesn't include utility clerk processing time and utility operators who pick this up and haul it down to the post office as well. 1,050 bills were generated and mailed, so the cost of doing that times that by the 1.2335 cents, and a month it cost us $1,295.18 to generate those bills that we're sending out, and in a year a cost of $15,542.16. That would be the cost recovery of not sending those bills out that we're generating.
And again, Manager Wall, there's no accounting for the labor.
Well, no, it's hard to do that.
Yeah.
It's also hard to account for once the utility clerk there's no extra work to generate those. It's part of the process. You just hit generate and it goes out. We can't really, it's hard to put a cost on that. Also, with that time that's being spent doing the generating and mailing and stuffing and all this other stuff, the utility clerk can then spend that time looking through the accounts, looking for problem accounts, solving problems that have existed, looking for problems that we yet don't know about. And then once that is corrected, then that's extra revenue that just keeps rolling each month throughout the year.
So we're halfway there.
Well, I don't think we'll get a lot of people left yet to go on there. Like there is a cost recovery, obviously, but that cost recovery, like we had said, doesn't account for labor.
So having the portion of the bill that shows what it's costing them every month to have it mailed to them, well, hopefully a few more people.
Yep. Yep.
I mean, we're recovering the costs
Right.
in that charge, and those that are having it emailed to them are not being charged. We'd like to get to the point where everybody was emailed.
That'd be great. Yep.
Anybody else have any questions on that? Because I know that it was a bit contentious when we first started, But here we are, we're at half the population. Go ahead, Councillor Riddick.
Yeah, I think this is the kind of story that would be good to share with the public because there was a lot of trepidation from people worried about the impact of being responsible for the cost of the paper bill. But I think it's, I mean, as somebody who's been an early adopter, it's great. It's extremely convenient and the process has been improved over the years too. So currently what they're receiving is very efficient and it's an easy way for our residents to be able to access their bills too. So thank you. I look forward to seeing that information shared with the public.
Carry on.
So the second agenda item, after the paper statement fee would be virtual city hall. There really hasn't been a lot done with that. That's been tabled. Is that correct, Megan?
That is correct. I can speak on this a little bit more too, because this was a 2023 initiative that was implemented almost before Manager Wall had started with the town. So this was something that I was spearheading, and it's been installed and it's ready for use. But the actual rollout of people joining in and going on, there's always hiccups and little things that happen when we do a mass rollout and communication to the public. So that's just been put on hold while I'm on still a bit of a leave, and just to allow us more time management and access to myself to make any adjustments that are needed. So the portal is there, it's installed, it's available for use. We do have some marginal use of it, but there is a planned major rollout and communication of it in Q3 of 2024. So the cost for this year is just the administration costs of having the annual license, which is $10,000, and the other costs related to it are, there's none right now. So hopefully we can add this as a means for corporate or community goers to access our portal 24/7. So people that are working shift work, people that are working out of town have another means of accessing all their bills and property taxes and paying for utility bills 24/7 without having to use option pay. So that's the goal for 2024. So Q3, expect a big rollout.
Right. Thank you.
And the last item from finance is the paperless accounts payable. The paperless accounts payable also kind of goes with a file storage group. It's called M-Files. And I don't believe we're going to be doing anything with that. That's yet to be determined on what is going to be required in-house. We really have to have well-defined, solid processes because everything goes through electronically, and then invoices get scanned and saved to our M-Files. So there's multiple things that we have to tag invoices with. There is a potential of also doing some of this stuff in-house with our diamond products, which would cut that cost. So basically, the budget that was put forward from that is still just sitting in reserve. We've not pulled anything out for it.
And do you feel that we will move into this process, or like it? I know things have been up because of Director Saskew and a maternity leave, and then you trying to take over a lot more responsibility, getting caught up here. So, but do we see anytime soon or a projected date where we'll be looking?
I can add to this. So when this was originally put forth in the budget, I was not on maternity leave, and our accounts payable clerk was not on a long-term leave. And so in the new year, when this rolled forward, because this was a 2023 budget initiative, and into the new year, we then had our accounts payable clerk on a leave for an unforeseen amount of time, up most of 2023, and then I was due to go on maternity leave and mid-Q3 of 2023. So this was put on hold in 2023 just because if we don't have the well-trained accounts payable clerk and myself, and Connie was still doing full payroll at that point in time, we just didn't have the resources necessary to put this forward. So once again, this is Q3. We'll be reevaluating this in 2024 when we have the resources we have. Once again, our accounts payable is away for an undetermined amount of time. So this is top priority once we're all kind of back, hit the ground running. But right now it is on hold because it's also not a good use of taxpayer dollars to implement a project that isn't, every functional person isn't there. So implementations can be quite expensive. This one alone could have been up to $30,000, and to spend $30,000 and not have the right people in the place is also not good use of taxpayer money.
Well, I think we'd all appreciate that. I mean, if we're gonna start this program, move forward with it, we'd like everybody to be in position and in sync to make it successful. Does anybody else have any questions? Go ahead.
I just would say that I appreciate in these different approaches that you've taken, that you've also looked at still being able to offer various options for people. While I understand that some things make financial sense, and that's the reason we've progressed forward with them, because a proper case was presented to us and we're able to go. We know that some people still have a certain way that they either want to or have to proceed. So I always think choices are important. I have no issue with the fact that in some of those cases, choosing even like a utility bill would have a cost to it to go, but at least that option is already there. What we're seeing too much in this world in many departments is a changeover and an attitude of, well, this is just the way it is and go. I appreciate that you're trying to still allow people to have some options, and sometimes the options cost them, but that's fair enough. So I also appreciate the fact that not rolling out a project or a new program until we're fully ready, because that is one of the most confusing things, I think, for people. So thank you.
Okay. Well, thank you, Manager Wall. Your first presentation here today. So we're not as bad as you thought, I hope. Oh, to be determined. Nice. Yeah. Okay, thank you very much. Next to the fun stuff, Director Saskew.
Thank you, Your Worship. I'm just looking online. If you guys refresh, my memo that goes with the financials should be available. So at the Ledge meeting, we are going through the draft of the financials, and then Wild and Company will be in for a formal presentation on Monday during council meeting. So we go into some of the more detailed budget versus variance analysis and talk more in depth, and then the overview from the auditors will be just a little bit more concise. And then if there are questions from today, it gives us almost a week to follow up with you and get those back to you. So the first attachment, let me just make sure I'm not confusing things. So the first attachment is the draft financial statements. So the independent auditor's report. As we noted, that there is a qualified opinion. So normally when you have an audit, you want an unqualified opinion. This year, our opinion is qualified due to the new financial requirements of asset retirement obligation. So this has been a moving target over the last several years. We actually did an early adoption of this in 2018, and things have changed in the last 6 months regarding this. So now, due to this accounting pronouncement, they want municipalities to book a liability and fund a liability for everything, including lagoons, building, underground infrastructure, asbestos, and lead paint. So that's the liability of taking pipes out of the ground if we cease to exist. So this could be a large, large sum of an aggregate money, and the prudent thing to do here is to not book a liability without an independent study done. I know we love doing extra studies, but this is what we're going to have to do to get this qualified opinion off of our financial statements for next year. So another summer project, but definitely more responsibility fiscally to the taxpayers than booking $1 million liability for something that we don't know is an actual liability. Because when we book these liabilities, we're recording an expense, which in turn comes out of taxpayers' pockets every year. So right now we have a qualified opinion, and there may be an additional liability to book in 2024 to have 2024 financial statements unqualified again. So unqualified is good, and that's what we've had every other year except for this year due to the asset retirement obligation. Are there any questions with that?
Go ahead, Councillor Bullock.
Just one of the questions. more municipalities are actually going through the same thing as we are with this qualified opinion this year, correct?
That is correct. That is what I've been told. I'm expecting some rollout of this after, let's say, May 1st or May 15th. And if there's a large sum of these, I'm hoping there's some consultants that come out, or sometimes Alberta municipalities will do something where this is a preferred vendor and they'll help us with these studies. So there's some municipalities that went and got a study very quickly in the new year and booked this liability, which I think isn't also sometimes maybe not the best thing to do if you're trying to rush a study. We know they take time. So I think the auditor said it's about 50-50. Some people rush the study and others are going with the qualified opinion this year. So I'm hoping that there will be some rollout and fallout from this, and that we can have some additional info this summer and get us on par for 2024.
Councilor Rudy?
Again, can you just explain the origin of this change in legislation for accounting?
Okay, so this is the CPA handbook. So there's the public sector accounting standards, and that is which we're governed by presenting our statements. So it goes down to every note disclosure, every way that things are classified as asset and liabilities on our financials. We are governed by the CPA handbook and the public sector accounting standards. And so this is a change that they announced in 2016-17 to come in effect, and they kept pushing the date. So it was supposed to be effective 2019, then 2020, then 2021. So this is the first year that it's actually effective. And now there's the rollout of this, saying that what we have booked for our asset retirement obligation isn't sufficient, and now there's all these additional things. So it's very similar to the TCA changes that were in 2011, 2013 time period. So this is just another accounting standard that's changed, that's causing grief for municipalities in the adoption year.
But this wasn't something that was put forward by municipal affairs.
You know what, I don't quote me on this, but I do believe that there is some, when they're putting these new accounting pronouncements together, there's not just some random CPAs like, let's just make municipalities' lives hard. There is a board that does help decide with these. So I don't know for sure where it originated other than from the CPA profession. So like, they do have accountability and they do have boards and they do have input, but I'm not sure who decided on exactly what extent it needed to be to make this as it is.
So our audited financial statement goes to municipal affairs,
That's correct.
and they go through it, and if it's where we've always had qualified,
We've always had unqualified.
and they're gonna look at it and say what happened, but they're fully aware that this is what the Accounting Association or the CPAs are expecting from us.
Yes, and we're hoping that there isn't a huge fallout from this. So if in a normal situation, if we didn't have this new asset retirement obligation, if there wasn't something new like this where there's half of municipalities possibly having a qualified audit this year, I don't foresee us not getting grant funds or something of that sort from this. But if every year we're having qualified opinions on like taxes and all these other things, municipal affairs would then, like, that's when they come step in and sometimes like take over and do all those fun things to municipalities that have been, so to say, not operating properly. So I hope that there's not any repercussions to this. It will be just one kind of X. When we had those annual indicators that I show you every year, there's the green check mark. So we're gonna have an X in front of our qualified opinion this year.
We had an X once.
Yes, that was
Municipal
for
affairs says that we were slow in collecting,
AR.
tax dollars that was owed to us by the province.
That is correct.
It make a lot of sense. So can I ask CAO Ling to get a hold of municipal affairs and ask them, first of all, who initiated the municipal asset retirement obligations? Was it recommended by municipal affairs? Did they work in conjunction with the CPAs? And how does this affect our rating moving forward where we didn't include that this year? Maybe there's a template out there that municipalities may be available to municipalities. I mean, to hire another consultant to go through this process just doesn't make a lot of sense to me.
They said that we could also use our engineers to do this, but this needs to be something from a higher level than like just what myself and Director Lefebvre could go through and check and tick box all of our assets. The accountants are saying that we would need either our engineers or hired engineered consultants to do this. So I will,
Go ahead.
this will be top priority for me for the summer to get this mitigated. And like I said, if there's 50% of municipalities that have a qualified report due to this asset retirement obligation, I'm hoping someone or something steps in so that we can get this on track for next year.
Okay, go ahead, Councillor Wall.
I definitely would be interested, and I totally get what you're saying there and where it came in from, and that there has to be some provincial aspect, but I do like the idea of writing the letter, because the bigger questions to me is to what end, because the assumption would be obviously that somehow the province of municipal affairs was involved, because otherwise then it shouldn't, like, there would be a disconnect that needs to be cleaned up. If they were involved, the question then runs to what end? So are they suggesting then that we are supposed to be taxing our residents to start covering this asset fund? And if they are, they need to be telling us that. So I think it's important to kind of get to the bottom of this a little bit, because I mean, and I don't think in any way that the CPA just made it up for fun, but I do know that sometimes when you're dealing with accounting things, they are very black and white in that this has to equal this. And sometimes within municipalities, we know that there's areas that they don't for certain reasons, some unfunded liabilities, different things. So I would really like to know what municipal affairs answers to why now that's a requirement. And if they come back and go, what are you talking about? Then we have another conversation.
Absolutely. And in the past, they've had these consultations and they've gotten RMA and Alberta municipalities involved. I went through my emails and there was one, like Alberta municipalities does a weekly or monthly bulletin, and in one of them in August, there was just in a little tiny box, like asset retirement obligation, this consultant, that there was no big center page explanation of it. Like there was, I went to the conferences last year, there was no talk of it. So it seems so strange that like we thought we were on par. We had that landfill study done. That was something that we had to do. Remember, we had changed the course of our landfill with the new projection number of years. We updated that whole liability last year. And now, honestly, 2 weeks before our audit, they're like, that's not good anymore and we need all of this. And it's like, okay, well, so, and the auditors were saying that they got additional info just the 2 weeks before our audit too. So it's just, it seems very, for something that's been around for so long, it seems very rushed in the final phase rollout of it. So it would be nice to have some additional info on it.
I don't even understand what they would do with a number that we would supply them to clean up if we ceased to exist.
I said it should be
That
booked on
doesn't
the
make
county.
sense to me. Why would they need a number like that?
If we cease to exist, that's the county of Minburn's liability.
But that's one of the big things, because a whole bunch of counties are saying, no, we're not taking these communities, because before that, these communities are just dissolving, becoming hamlets, and now there's been counties pushing back. Smoky Lake County was one that came up where they said it's great to say, well, they dissolve and become part of, but now we're taking on somebody else's liability that we never had a say. So that's the only thing I'm thinking, is maybe that somehow they're trying to come up with some number that would look on, because some of these counties are going, what happens if we say no? So I'm wondering if that might tie in slightly, because, yeah, it falls to them, right?
Or they have a number of a liability number that we'd all have to share if we took on all becoming special municipalities.
Yeah.
Yeah.
Yeah, I don't get it, but Sandra, you, CAO Ling, you will find out who initiated this and what repercussions does it have on us by not having it done this year. Okay, does everybody understand that? Sure. So, we're not at fault here. Like, there's nothing we could have done other than hired a consultant to come out and take a random guess at what that number would be.
Yes. And if we did that last summer, we were being extra careful, more so than what we would have ever expected. Like, we thought we were way on side with this. We did the additional landfill study. We projected our landfill based on new rates with the compaction and the compactor that we had. So we had done a ton of work already and have revised many different things to even have this where it was last year. And then now it's just like, oh no, that's not good enough. We need all these things. So it's unfortunate, but we will, once again, another hurdle that we'll work through. And like I said, I hope the repercussions won't be great when it comes to municipal affairs with our grants, et cetera, because from what the auditors said, that's like 50-50 who's getting qualified reports this year. So that is all. So the first 2 pages, like I said, is all auditor information. Kyle goes through that in detail, so they'll go through that in Monday's meeting. The next page is the management's responsibility for reporting. So that's just saying that we have prepared our own financial statements and the auditors are auditing them. So, moving on to, it's page 2 of this document. It's called Consolidated Statement of Financial Position. I think it's on page 3 or 4. This is where it goes in conjunction with my second attachment, which is the memo. So the financial position, so in 2023, the town's net debt position decreased to 3.74 million from 4.8 in 2022. So this is largely a result of improved cash position offset by increases in accounts payable. The increase in accounts payable is largely attributable to increase in holdbacks payable for the construction projects that we have on the go. So Prosperity Industrial Park and the Forced Main. So Prosperity Park, we did have at December large holdbacks payable. In subsequent 2024, we have paid a lot of those holdbacks because that project is very close to substantially complete. The net debt financial position indicates that the town does not have sufficient financial assets to repay its financial liabilities as of December 31st, 2023. So that's the net debt of 3.7 million, partway down the page. This seems alarming, but it's not. So as you can recall, our long-term debt of just under 10 million, or just over 10 million, is not all currently due. So if we had to pay it all in 1 year, we would be in very poor financial condition, but our repayments for 2023 are $665,000. So adjusting the financial liabilities to reflect only the current portion of long-term debt, we are in a profitable position. So sufficient financial assets to satisfy obligations. So once again, this is just how the accountants make us show it, not necessarily what is reality, reflective of reality. So financial assets, the town's total financial assets of 13.16 million increased by approximately 370,000 in 2023. This is primarily due to an increase in amounts due from governments of 1.8 million for grant monies receivable. So those are grant monies that were spent in 2023, but are still not necessarily paid to us. So that has been rectified, and some of those have been paid subsequent to year end. I think 1.2 million was for Prosperity with the ISIP grant. So all of that reporting has been caught up, and we're no longer have 1.8 million outstanding in grant monies. The town uses investments to provide a return on public funds. Note that these funds consist of reserves, capital funds, provincial grants, and operating funds. Currently, the town has restricted reserves and deferred revenues totaling approximately 1.27 million. Investment activities for the town are governed by the MGA, and the town invests only in qualified investments. Interest earned in 2023 on investments in cash totaled approximately 535,000. So this was up from 254,000 in 2022. So this increase is a result of higher returns on investment due to increased prime rates throughout 2023. So we doubled our investment income based on just the prime rates increasing. So that was a nice addition. So we have most of our excess funds, we have high interest savings accounts that are offered either through Alberta municipalities and through our banker. And the benefit of using those versus a GIC is when prime is increasing, our rates are also increasing. If we had these funds locked into a GIC, we wouldn't have bared this benefit. So when it comes to investing, we are always looking at what is prime going to be doing in the foreseeable future. So at times when the rates are very low, like what they had been the last several years, when they're going down, it's always best to invest in some GICs. But when the rates are when the rates are really low and not changing, the high interest savings account can reap these benefits, because when the rates do start to go up again, we can receive the additional interest rate then. I will go to liabilities, so that's the middle section here. The town's total 2023 liabilities decreased by $684,000 in the year, so 16.9 million. This is primarily due to repayment of debt, countered by some increases in payables. Accounts payable and accrued liabilities increased by $1 million in 2023. The change is the result of increased holdbacks payable as at December 31st, and that was due to our ongoing capital projects. As I had noted, some of that has been repaid in the new year. Accrued employee obligations have decreased $26,000. These are consisting of accrued vacation and accumulated sick leave. So that varies year to year depending on where our staff are at, but $26,000, that's very steady. There's no alarming changes there.
I have a question on that.
Absolutely.
So, when we started the year, we were looking at getting the holidays that were owed and these numbers down to a manageable level. Are we getting close to what we were targeting?
Well, we did decrease 26,000, and we have given staff a 2-year plan to use up that vacation. So some staff, this is just a handful of staff that have the really large vacation. So I'm happy to see the number going down. Deferred revenue is made up of contributions from other levels of government and other revenue deferrals. So deferred revenue has decreased 1.1 million, and this is primarily due to the timing of government contributions received. So this last year, in the summer, there were certain grant things that weren't submitted, and that is why they didn't give us some of our 2023 contributions. That is why our grant receivable was so high on the books, and obviously that's why deferred revenue is down, because we have such a large receivable. We've already used all the funds that we had that we were holding and normally earning interest on. So I'm happy to report that we have received our funding now, and we can hold that money. It's always best to hold that money in our bank account because we can earn interest on that. The interest does get attributed to that project, but still the $1,500 interest, some of these amounts that we get a month add to the project value too. So happy to report that is back on track. Long-term debt is decreased $645,000 due to payment of contractual debt repayments. So long-term debt is our capital financing, so to say. So there is a chart on the summary page that I have, and it's just showing that our long-term debt has been decreasing. We haven't drawn anything since before 2019. So on the following pages, we'll talk about the debt limit and what the town has available for financing in the future. So that would be this page on my second attachment. We'll go into that a little bit. So the Municipal Government Act regulates what we can take for debt and like what portions of our revenues can be in the debt limit. So the town's debt limit has remained stable over the last 5 years, where the available limit has increased as we've repaid debt and not taking new advances. So this first chart, the blue is long-term debt that we have, the orange is the debt limit, and then the gray is the debt limit available. So you can see our debt limit available has been climbing, our actual long-term debt has been decreasing, and that's our debt limit. So we're, yeah. If you refresh, it should be draft 2023 audited financials 2.
No, I didn't.
Did we find it?
That's fine. I mean, I looked at these.
You like charts.
Circle chart.
I did your circle charts for you too.
I'm good, that's fine.
So, long story short, we've been repaying our debt. We haven't taken any new debt in the last several years. So we have 17 million of debt limit unused and 3.6 million of debt servicing unused. So 17 million. So we have 27 million, almost 28 million of a debt limit. We have 10 million used, and so we have 17, almost 18 million available to do debt financing. And
That must
must be where
I've updated the values since maybe they last looked. As disclosed, so I'm going kind of flipping back to my financials now. The consolidated statement of financial position, the net debt is 3.7 million, and so this decrease is due to the repayment of debt in the year. So always good to see. So the last thing is the non-financial assets. So that's tangible capital asset inventories and prepaid expenses and the non-current portion of land held for resale. So TCA is the single largest item on this, and the balance of 62.3 million. This represents an increase of $700,000, which largely due to the construction progress of Prosperity Park, as well as we did start some of the forced main in November, December of 2023. Other items that we had in this year were the new highway signage, progress on forced main, a new commercial paper shredder, scissor lift, half-ton, hot pour machine, fire SCBA upgrades, a fire gear washer. We did manhole replacements and road overlays, which included the Pasanka Park. We also had contributed asset of the Rotary Bike and Skate Park, and that was in tune of $900,000 as a contribution from Rotary. And then amortization for the year was $3.4 million. The other non-financial assets, there were no significant changes in these from year over year. And then accumulated surplus, which is the last line, you can see it's increased, and it's 1.88 million increase over prior years. So we had increasing our surplus, always good to see. So the next page is the consolidated statement of operations. So this is our revenue and expenses. So overall, the first line there is net municipal taxes. So property taxes have increased approximately 134,000 to 9.316 million. So 2022 was 9.182 million, and approximately 55,000 less than budget. And so we know those are due to the assessment changes after we did our mill rate last year. So council increased property tax revenue back to pre-COVID levels in 2023 after a 2% decrease in 2021 that was held in 2022 as well. So these lower levels of municipal budget were maintained with the use of one-time grants related to the pandemic, carry forward reserves, and as a result of savings due to buildings being closed and staff being laid off, and through extensive use of the town's reserve. So 2023, we saw our net municipal tax amount go back up to our 2020 levels. So that was the 2019 budget planning phase in 2020. The next lines are the general government services and protective services. So I'm gonna flip you back to my handout now, because this is just a lot of numbers and it's nice to see it in a more user-friendly. So on page 6 and 7, so page 7 goes through the revenues by functional area, and I have a nice circle chart as to where our revenues are spent. So you can see that 39% of our revenues are from net municipal taxes. Protective services makes up 5, recreation, parks and culture makes up 8, facilities makes up 1, public works makes up 4, community services makes up 3, utilities 14%, and municipal services 5, and planning and development 11. So those are our revenues that we generate through both net municipal taxes and self-generated funds. The expenditures are on the next page, so page 8. And so you can see planning and development makes up 1% of our expenses, general government makes up 16, protective services 15, recreation, parks and culture 16, facilities 12, community services 5, public works 13, utilities 13, and municipal services 9. So I did go through some variance analysis year over year. What can I talk about? So protective services, so they consist of safety services, policing, fire, emergency management, no longer ambulance, we can take that out, no longer divestiture date, and municipal enforcement. So revenues were over budget by $628,000 in the year, And this is due to fire revenue being over budget for billings for fire deployments. We had all those fires in Alberta last year that we went on deployment, so those were unbudgeted revenues, as well as a couple unbudgeted grants in 2023 for the fire. And so in turn, expenses and protective services were over budget by 458. So like I said, net profit of 200. This is due to corresponding expenditures related to fire deployments and the grants that were not budgeted. So overall, they were 203,000 below budget in 2023. So good to see. Parks, Recreation, and Culture is another one. If you look at some of the budget to actuals, they were over budget by 834,000. And so this is largely due to a contributed, this is the revenue side. That is due to a contributed asset of the Bike and Skate Park, which was 900,000. And then expenses were over budget by 296, which is a result of the disposal of the Trans-Canada building, so the vacant commercial property is in there. Actually, that's in facilities. The net operating costs were approximately 760 over budget, and that is due to the accounting on the disposal of that vacant commercial building.
So, expenses, I don't think I've seen Parks and Rec be ahead of Public Works before. This is the first time I've ever seen.
But that's because of the disposal. So the disposal on that building, we had to record the full cost. It's an accounting disposal. So that commercial building that we sold for 2.7 million, we had
You
to.
said that was in facilities, though.
It's Parks, Recs, and Culture includes, oh, it is in facilities, so you're correct. Yeah, I will have to follow up on that. And you're saying it's not more than Public Works. Public Works is 4.2.
In expenses,
Yeah, that's the one we're looking at, the page 8.
Oh, I see what you're saying.
I just, like, to me, like, that it's, Public Works was 13% of the overall budget, and expenses, and Parks and Rec was 16%. I just never seen it that way before.
I'm gonna have to verify that number for you because on my actual statement of operations, it's $1 million less.
Okay, that makes more sense.
There,
There could be an error on that one.
okay, well, it's recorded in the statement, but just on this chart, I mean, it just doesn't reflect what we normally see in expenses to the municipality.
Let me look quick. I can get back to you on that. I don't want to
And
hold us up.
that's fine, Director Saskew. I mean, people look at this protective services, the RCMP is in there.
Yes.
I mean, the general government. So, I mean, it just, that one there just throws me off a little bit. I've just never seen it before. Unless, Public Works is doing a heck of a job, making money for us.
Okay, I see where that comes from.
All of a sudden, I like circle charts too.
Okay, so I see where those numbers are coming from now. So if you go to Schedule 6 of our audited financial statements.
What page is that again?
Page 11. That is where the 2.982 million under Recreation, Parks, and Culture under revenues is more than Public Works, which is 2.412. So those are where my numbers are coming from. So it is more, and I can look into more detail as to what is in there that it is costing more. But yes, you are correct, it is more, as I
I
present
just-
it this way.
Traditionally, we've never seen that, between those two departments, where the expenses are more for Parks and Rec than Public Works. What did we buy? What did we, I just don't know what happened.
Yep, I will follow up on it, and that is why
Some of our paving and all that have fallen in there for,
I believe, I I'm gonna have to check where the Pasanka Park paving went.
That's what I'm wondering, if Pasanka Park might potentially be considered Parks and Rec.
Like I said. But this is why we present these things to you, because then we can get those good questions ahead of time versus while the auditors are here, there's not a lot of time for follow-up before we adopt things. So I will follow up on that and get back to you on exactly what was in there. I'm sure there's an easy explanation.
Okay, thank you.
Okay, so overall, any other questions related to these two circles?
Seeing none.
Okay, perfect. So that's the statement of operations. I got so many pages open here now. So after that, there's the consolidated statement of change in net debt, which is page 4 on the financial statements. So this is just going through the changes in our net debt. So our net debt changes by acquisition of capital, amortization of capital, the contributed capital asset, which is the Rotary Bike and Skate Park, proceeds on disposal of capital, which is the sale, predominantly the sale of the commercial lot, and there was, I believe, we had some insurance proceeds on a mower. And then the loss, the accounting loss on this disposal of the capital assets is right there. So that is what changed our net debt position for the year. Statement of cash flows. Accountants don't even like this, so I think we'll just continue.
At what point in time does Prosperity Park come into the tangible capital asset column?
It is, so it's included in that TCA column. So right now, Prosperity Park is added every year as construction in progress. In 2024, we'll say it's complete, and I'll move it from in progress and then put it into each of their columns. So right now, in that 6.7 million that we added in the year, I think 4.1 million is related to Prosperity Park. So it is in there already. So every year we've been adding for Prosperity. And then same thing, going through all these additional schedules, it's just showing over and over the balance sheet, all the different changes and all the different changes in revenue displayed 7 different ways, as well as the notes. So I will continue on to page 9 of my handout. We have another graph here. So this is the consolidated statement of operations, and then it shows the percentages of revenue. So once again, just revenues again shown in a different way. This is also including capital grants. So that's why the percentage of net municipal taxes is now 41% instead of 39%. It's because percentages are calculated as the dollar amount over the total, and when we add the capital grants in, that increases the total. So overall, a large chunk of our revenues are net municipal taxes, capital grants, user fees, and then there are some operating grants. So that's how our municipality runs on day to day.
The investment income,
That was
probably never see that high again.
no.
I was not.
And just think if we didn't have $1.8 million of grant receivable, what we could have also had in income. Would have been a good year to have all our grants ahead of time. Expenses by type, 41% salary, wages, and benefits. So this includes vacation, accumulated sick time, all of those benefits earned in the year. LAPP, WCB, that's fairly predominantly not a, that is what most municipalities see when it comes to salaries and wages. Amortization expense, so once again, amortization expense is on our books. It's an accounting cost that we're required to record, but we do not actually levy taxpayers for amortization expense. It's below the line, so we actually show on our operational budget, we show like our amortization was 3.4 million this year, so we have like a net profit for budget of $200 or $2,000, and then we add an amortization. So our overall budget is a net loss of 3.4 million. So amortization is there, but we don't actually fund that expenditure. So that's good to note. Versus this asset retirement obligation that we've been talking about, that is something that we actually have to fund and levy taxpayers on. So that's the big difference between TCA, new pronouncement from 2011, and the new one that is this year with ARO. It's actually a funded liability. So the other expenditures, contracted services and goods purchased, so that's fairly standard for a municipality. And then I have summary of our property tax assessments. So as you can see, we've been very stable in 2023. So this is 2023, this is last year's property taxes. There was a slight increase, but still not quite where we were in 2019 for levels of assessment. So our trend went down and it's been slowly going up. In 2024, we're gonna talk about that. 2024, we have recovered back to 2019 levels. So that is good to know. And the last one I have is where our tax dollars are spent. So this one is an aggregate based off of total expenditures. So you can see here, Public Works is bigger than Recreation, Parks and Culture. So it's just the way that it was shown in that one.
Way it was recorded, so the paving project didn't get billed to Public Works, it went over to Parks and Rec.
Yeah, that like that, I will double check and confirm that. So this is the overall expenditure. So you are correct, normally Public Works costs more than Recreation, Parks and Cultures. This also includes our amortization figures. So, does anyone have any questions? I know we went through a lot really quickly.
Councilor Rudick, go ahead.
Is it possible, I don't see it on here, the amount that we would have been owed in grants in lieu of taxes from the provincial government, where does that show on here? They no longer pay.
We weren't owed at year end, we were owed less than $1,000, so they were paid up by the end of the year, which is nice. It was in, I think, 2019 or 2020 where they had over $1 million still payable to us at the end of the year. So those have, ever since then, they have been very good at paying them, not before our June deadline, but normally by the end of September, October. We've been receiving them every year.
I think what Councilor Rudick is getting at is,
Yeah.
we used to receive a grant in lieu of taxes on some buildings in town that were financed through the government, like maybe Vegreville's senior housing, and then the provincial government pulled that funding, the grant funding, in lieu of taxes. We no longer receive that.
Yeah, sorry, that is, I mean, I like your answer as well, because there have been some canny accounting practices province to the municipality, but grants in lieu of taxes represented a significant amount of money because we have a number of provincially owned entities in the municipality. So I'd be curious to know what portion of that we're not receiving any taxation on.
Okay, so I actually have that open. So our grants in lieu have been fairly consistent. So that's that gray on here, the 47. But then if you look in the exempt, the 121, the 117, the 120, the 119, the 119. So those are the ones that are exempt. So included in there are churches. Which one were you specifically asking about?
All provincially owned.
Provincial exempt and institutional for 2023 make up 19.1 million. Because then there's also the town exempt, obviously, nonprofits, parks, reserves, hospitals. Their hospitals are 12.9 million. Public schools are 13.4 million, separate 8.2. Yeah, the county is 2.5 million,
You're talking the assessment.
the assessment.
Okay.
Yeah, in total, we have 119 million in exempt property. So we get grants for 45 million, so the 119 plus the 45 would be the total amount. But we no longer get grants for the 119,000. Those are just ones that are just written off as not taxable assessment.
Yeah,
Be nice.
used to be good.
33 of that is town exempt. So almost 34 million is our town property that we're not levying taxes on ourselves. But
Well, having the former Trans-Canada building back on the tax roll will help a bit there.
yes.
That is a good number to have for future advocacy, though, even on the fact of, as we talk about the downloading of services that keep running on the province, on the municipalities, it might be a piece where it would be good to be able to say, look, we keep talking about downloading a service, but here's like what is exempt that is provincial. Like, is there, maybe that is part of a discussion when looking for some funds, because that's an important piece of information.
Yeah, and it would, I think it's kind of flown off the radar for a little while because, I mean, the last number of years, we've had COVID to interfere with this conversation, but it was in 2015, I think, is when it was first implemented, like it was a graduation in terms of what the original value was. But it represents quite a significant amount of lost revenue for us because we have a lot of, we're considered a hub for the region. We've got a lot of provincially owned entities in the municipality that we don't receive a penny for. And just as a point of clarification, we don't stop paving or clearing snow in front of the courthouse, for example, or in front of all of these other provincially owned assets. And the province has stepped aside from that responsibility or sharing that revenue at the same time that they've decreased our granting.
Yeah. If I did a 10-year of this, you could probably see how the gray box was bigger,
yeah.
and it went smaller, but it was pre-2019 that they had done that. And that is all I've got.
Okay, any questions for Director Saski? Well, we appreciate the work you put in getting this ready for the auditors, and we look forward to their presentation, which are usually pretty exciting, really. Auditors? Not so much, I guess.
You'd have that answer on
Thank you, God.
Yeah, it would be nice to know where municipal affairs thinks of, what it looks like moving forward for us, so. Okay, thank you very much. Next up, property tax and tax penalty bylaw.
Yes. So there's two attachments. The first one is the memo and the second one is the draft bylaw. Do you need me to read all of the bylaw out, or are we just gonna go with my draft memo? I'll start with my memo.
Okay.
Okay. So, 2024 assessment and taxation highlights. So, consistent with MGA, the 2024 assessment reflects the market value of property as of July 1st, 2023 for the taxation year of 2024. The assessment was undertaken by our externally contracted assessor, Municipal Assessment Services, Inc. Overall, taxable assessments have increased by 3.2% from 2023. Residential assessments increased by 4.78%, and non-residential assessments increased by 2.36%. So for 2024, residential assessments make up 67.8, and non-residential making up 32.2. So this is very comparable to 2023 values. So assessments have both risen, residential slightly more than non-residential, but overall the breakup between residential and non-residential has been stable year over year. So the taxation bylaw on December 11th, 2023, Town Council approved the 2024 operating budget and must approve a taxation bylaw annually to raise the necessary funds to provide services approved in the budget. As in prior years, levy is split 47% residential and 53% non-residential. The small business tax rate discount remains at 20%. So the provincial education tax levy. So pursuant to the Municipal Government Act, the town is required to levy a tax to pay provincial education requisition. The 2024 education requisition ratepayers remain stable with the prior year amounts. A caveat here, it remains stable because I don't actually have the statement of intent yet. Last year I got it on April 12th and I was hopeful I would get it this week. It is still not available. So in the event that we get one before Monday, and it's slightly different than what last year's was, I will adjust the bylaw. But for right now, we're going with what we had last year. Most times when they do a statement of intent this late in the game, they just adopt prior year's actuals. So I'm hopeful that that is what is going to happen again, but that is a little caveat. I may have an updated number for education requisition on Monday. So the MD of Minburn Foundation requisition for the Homestead Lodge, it's increased by approximately 21,000. So 10.84% seems gigantic, but on a $200,000 requisition, 21,000 is 10%. So it has gone up slightly, but not the same as if our provincial education requisition would go up 10%. So impact and changes of assessment. So as noted in 2 above, budget requirements were established by town council when they adopted the operating budget. Changes in assessment values do not have any impact on budget requirements. So for example, sometimes it's assumed when overall assessments decline, as we've had seen in the past several years, that there's correspondent different, like decrease in taxes levied. This is not the case. Once the budget is approved, the tax levy is set to collect the amounts required to satisfy the budget requirements. So our assessment is here, our net amount is what we have to collect is here, and we take the two together to make the mill rate up. So the assessment times the mill rate equals how much we're levying. So single family residential illustration, so just for illustrative purposes, a family residential assessment class with the rounded assessment of 204,910 in 2024, it would have had a 2023 assessment of 197. So based on the proposed tax rates, municipal levy is $1,857.90. 2023 would have been $1,788.21, which is $69.69, so $69 more than prior year, which is a 3.89% change, which is less than our increase in taxation collected of 5%. So what happened here is our residential, we had growth, we had new builds, so we are in essence taxing some of the growth here. So by increasing taxes, we're also increasing the pie of the people that are paying into it. So instead of, if we had no growth and we did a 5% tax increase, we would expect to see a municipal increase of 5%. So there was some growth as well as increase in taxes. So overall, $69 for an average household is what it'll cost for the whole entire year. The education requisition, as I had noted, actually that should be $0. There's some math wrong there. And so that is exactly the same because they have not given me a new amount. And the MD of Minburn Foundation, $64 compared to $58 in the prior year. So that's $6.01 change. So 10.3 increase. So that's a combined levy of $2,400 in 2024 versus $2,300 in 2023. So an overall increase for the year of $67.52.
If the education requisition stays where it's at.
If the education stays where it's at. I think actually 2023 is a typo. I think it did decrease by $8.19, and the 2023 amount should be a different number because the assessment changed. So just because the bill rate times assessment, like even though it's the same house, it would have had a different number both years. So there was a typo in the 2023. So I do have a schedule further down. So schedule 1, it shows the percentage increase in the amounts levied. And so that is explained in item number 7. So in addition to collecting taxes for municipal purposes, the town also collects levies on behalf of the Minburn Foundation and provincial education. The total tax dollars to be collected on behalf of all authorities is estimated to be $11.98 million. The allocation of these tax dollars between the town of Vegreville and other requisitioning authorities is illustrated in Schedule 1 at the end of this document. And then analysis of 2024 tax rates. So Schedule 2 provides a breakdown of the 2024 taxes by requisition authority for residential, non-residential, and small business classes. As mentioned in point 2 above, the basis for establishing the 2023 rates is to collect 47% taxes from residential and 53% from non-residential, as in prior years. As noted in point 2 above, non-residential subclass is split between small business and non-residential others. So the small business has a 20% discounted rate. Combined assessment and tax notices in 2024, combined assessment and taxation notices are planned to be mailed May 8th, 2024. The assessment date will be 7 days after mailing, and the assessment appeal date will be 60 days after the assessment date, which is July 15th, 2024. I believe that's a Monday, in accordance with provincial regulations. This will provide 67 days from the mailing date for property owners not satisfied with their assessment to formally appeal their assessment. And as we had noted, the formal appeals, it's not us as the town dealing with that. That is through our special teams as well as dealing with the assessor directly. The 2024 property taxes will be due no later than the last business day in June, which is June 28th, 2024, and penalties will be applied to late payments in accordance with the bylaw, which we will go over shortly. And then the tax installment payment plan is still available for ratepayers. So switching quickly to the bylaw. I'm just gonna close. A couple items to note. So it goes through all the different requirements for Alberta School and Elk Island and MD and where the assessments are. If we scroll to the end, you have the different tax rates. So total for municipal, policing, Alberta School Fund, Elk Island, and designated industrial. So on the last page, we have a summary. So residential rate is 11.7282, small business 21.5841, non-residential 25.9819, industrial properties 26.0584, and machinery and equipment 22.3575. Penalties are set to be levied on current taxes remaining after June 28th, 24 of 15%, and 15% on all taxes remaining unpaid after December 31st, 2024. And then it just goes through that. Are there any questions? As I had noted before, the last schedule in my memo goes through a comparison of rates year over year. So Schedule 2, so that you have the 2024 rate compared to the 2023. So the 2024 combined tax rate for residential actually went down slightly. 2023 was 11.81 and now it's 11.72. The small business remained fairly stable, as well as the non-residential remained stable and the designated industrial. So as I said, the growth in residential was slightly greater, so that we actually, even with the tax increase, still had some property growth, like there's a bigger pie for people to pay the taxes out of. So that's why we're seeing that slight decrease in the rates.
Okay, so this new bylaw on the tax bylaw will be coming on Monday?
That is correct.
And if there's no update on the education portion, we will have to amend the bylaw afterwards.
Honestly, unless it's a very significant change, I would say that we would leave the bylaw as is. And then in the past, when they've had, so they've done a statement of intent in the past, and then they've changed the actuals in November or December, like well after we've done. And if there's a significant discrepancy, we look at that every year with the audit, and we actually book an over or an under levy, and we add it into the next year's bylaw. So unless there's a huge significant change, we have a fairly quick turnaround. So we're gonna pass this bylaw the end of April, and we're mailing property taxes the second week in May. So we really don't have a lot of time for, as far as council meetings go, to amend the bylaw. Unless there's a significant change, I would say we're just gonna go with this, what this is, and if there is an over and under levy, we would make up the difference in the new year. If that's okay with council, if that's council's direction.
Well, that's been our practice before.
Correct.
Is anybody opposed to that before we get to Mondays? Okay. It looks like you're done.
Thank you.
Thank you. Next up, Community Engagement and Economic Development Manager, Jamison Brownlee.
Thank you very much, Your Worship. This pertains to, just try it, there we go. The establishment of pricing and marketing parameters. Sorry, I'm going to try to turn down my mic because it sounds like I'm a lot louder than everybody else. Nope, can't do it. Oh, I'm just going to talk really soft. Marketing parameters for the vacant town-owned lot located at 5521 51st Street. The background on this is that the MGA requires the selling land at a price that is as close as reasonably possible to market value. And per the town sale of town-owned land policy, the prices set by council can be determined by several factors, including the opinions of realtors. The two local real estate agencies have previously expressed in written correspondence that the fair market list value for similar lots in Vegreville is $19,900, including lots located at 4414 49A Street, 4709 49th Street, and 5617 49A Street. Council must also set marketing parameters for town-owned land, including but not limited to listing the properties with local agencies and commission rates. Financial implications, should council elect to list this lot with the two Vegreville-based real estate agencies, there would be an initial service fee of $100 plus GST per realtor per lot. Should a realtor approach the town with an offer that council is agreeable to, the realtor would also be compensated a commission rate set by council. So our options, as this will be going to Monday's council meeting, is to set the price for 5521 51st Street at $19,900 and list the property with the two Vegreville-based real estate agencies with a standard commission rate of 7%. We can determine a different list price for the above referenced property and list the property with the two Vegreville-based real estate agencies with a standard commission rate of 7%. Or we can determine both a list price and marketing parameters for the above referenced property that does not include listing the property with the two Vegreville-based real estate agencies.
Okay. Any comments? Go ahead, Councillor Bullock.
I'm gonna be leaning with option A, just going along with what we've been doing with the other properties.
Okay, well, this will be coming to Monday's meeting.
Correct.
Okay, thank you. Oh, go ahead, Councillor Rudy.
Thank you for bringing this forward. It's good to see some of our infill lots making their way onto the market, and hopefully some infill construction will follow. This won't be something that is needed immediately, but I'm just curious as we move up to the next budget process if we will be able to see an inventory of what we've got left in terms of available infill lots, properties that we've assumed.
I can comment to that. So the ones that are listed as the comparables, those are currently our infills that are serviced and ready for marketable land. The other land, like other than the ones that we will acquire via tax sale in the fall, the other ones are not serviced lots. So they're just either like considered farmland or just vacant residential. So those aren't necessarily like saleable as a infill at this point in time. So these, it's just the four.
Okay.
Okay, thank you. All of a sudden, my is turned up or something. Okay, next up, Director Lefebvre.
Thank you, Worship. I'll start with the memorandum to council. The topic is repealing bylaw 01-2012 municipal development plan. The proposal to have town council repeal bylaw 01-2012 municipal development. Background, the town of Vegreville's municipal development plan was last reviewed in 2012 and in 2019. Infrastructure planning development started to review the MDP just in time for a world pandemic. Most recently, the MDP was advertised in the local paper and online for 4 weeks, as well as we hosted an open house. The feedback at the open house was positive, and we received no major concerns, just a few comments. Reviewing and revising the MDP regularly ensures it is kept up to date with municipalities' growth and change and helps plan for a prosperous future. Our communications strategy is after a successful first reading, advertising will be set for 2 consecutive weeks online and in the local paper. A public hearing will then be scheduled for May 13th, 2024, with the opportunity for second and third reading on the same day. The options for council are to review bylaw XX 2024 and move forward with the process, or option 2 is to review and deny and provide reasons why.
Okay, thank you. Any comments? None here?
Okay, and the first reading will be at the April 22nd regular council meeting.
Okay, sounds good. Okay, so next up, CAO Ling.
Sorry, excuse me, sorry, I was scribbling notes. Okay, next up is the memorandum to council regarding the RFP for regional recreational feasibility study, the discussion. At the Legislative Committee meeting held on February 20th, 2024, council was informed that administration had successfully applied for the Alberta Community Partnership Grant to fund a regional recreational feasibility study. The County of Minburn, the Town of Mundare, and the Village of Holden agreed to partner with the Town of Vegreville on this project, with the Town of Vegreville acting as the managing partner. The first step towards completing this study, as outlined in the grant application, will be to draft and submit a request for proposal, an RFP, to hire a consultant who will complete the study for the region. Council has been provided samples of completed recreational feasibility studies from different municipalities across Alberta to assist in determining what council would like to see in our study. Based on the ACP grant agreement, our study must include a market assessment, an analysis of competing and complementary recreational facilities, and a financial viability and site analysis. As the Town of Vegreville has only 2 years to spend the ACP funding, and most studies of this nature take approximately 18 months to complete, it would be advisable to draft and submit the RFP as soon as possible. Administration is requesting council's feedback on what they would like to have in our study, so we may draft the RFP for submission. There are no financial implications submitting the RFP via Alberta Purchasing Connection. The consultant hired as a result of the RFP will be funded through the ACP grant funding. The communication strategy is administration will facilitate meetings of the steering committee comprised of a council member and administration member from each partnering municipality. While the Town of Vegreville is responsible for tendering and contracting the work for the study, the steering committee will assist with the project planning, providing access to key personnel, resources, and data. All members of the steering committee will participate in decision-making, reviewing, and committing to outcomes and recommendations resulting from the study. So the options today are for town council may provide feedback on what they would like to include in the regional recreational feasibility study, which will direct the contents of the draft RFP, or town council may instruct administration to draft and submit the RFP without further feedback from council. Just two.
Comments on,
Just a question.
oh, you don't have a comment?
Not a comment.
Okay, go ahead.
I'm assuming, but just for clarification, oh, that's loud, there's certain partners listed here, but if we were looking at a feasibility study, we would be looking beyond some of the data of the people agreeing to be partners. Is that correct?
Yes, we're planning to look around through all our neighboring municipalities, we have data from the Recreation Department on which communities, people that access our services are from. So those will definitely be ones that we will be reaching out to interview and everything. However, with the parameters around the grant funding, and we needed to include those that actually submitted letters of support with our grant letter. They are the ones that get to sit at the table and have votes.
Councilor Barry, is a document that we should be providing to a successful company as well, like the recreation study that was done.
Yes, I would assume that would be available to them. But I believe the purpose of the consultant is to also find out and advise us what the public believe we should have in the facility?
Yes, that is actually part of the study itself. They will be consulting not only our neighboring municipalities with what infrastructure they currently own and is currently in use, but also the public will be consulted on where they use these facilities. Let's take, for an example, a curling rink. Do you curl in Two Hills? Do you curl in Vegreville? Do you curl in Mundare? Ranfurly has a curling rink. There's a lot of different curling rinks, and so where do you curl?
So if they are, not, sorry to interrupt, if they are provided the former document that we worked on, much of that information is there, and it'd be interesting to see if it changes. You know, it would be a good starting point in terms of who's using our facilities, because it also was asking, say, individuals in Mundare, did they curl in Manville, and vice versa? You know, those sort of things. So that all of that was incorporated in that study, but it is out of date.
Yes, we will definitely, whoever is successful with the RFP, we will make sure that they do have a copy of our regional recreation master plan, and that will help facilitate some of the conversations that they wish to have.
Okay, so we all got to see 3 altogether proposals or what it potentially could look like. The one from Lloydminster, there was one that admin was pushing more like that. I mean, there was some pricing in at the end. The one from Mountain View, Langdon, I guess was the name of the community. That one there, that was pretty good about how much information they knew about the surrounding areas, what was going on in the outskirts of Calgary, and future builds that were coming up. I mean, I don't really foresee that here, unless they go to Sherwood Park and say that this is what Sherwood Park plans on doing. But I don't know. I did like the one that what admin proposed, what was done in Lloydminster, but there were some aspects from the one from Langdon that I liked too at the very end. You know, and what it looked like with a rink, without a rink, and you know, I mean, where are we gonna like? We're gonna leave this up to admin and how many seats we would like to have at the arena, or like moving forward. How does that gonna work?
Well, I guess what we're looking for right now is pretty much, maybe not so in depth, but for example, does council wish to see kind of like an artist conception of what the building could look, the facility could look like? Does council want, if the part of the grant funding is to look at different sites within the community where we could build this, which sites would work better than others? Does council want to see like an artist rendering of what the building would look like on the sites, or do you just want a list of our first choice would be this plot of land, our second choice would be this plot of land? Part of this is because some of the consultants that do this work don't necessarily do the artist renderings themselves. So they will have to hire a subcontractor to do that, so they would have to include it in their price.
Yeah, again, I mean, we looked at Lloydminster one, basically after the consultation they had and stuff, they were like, yeah, I don't think you really need a new, you know, a pool. I mean, we're just gonna do some work on this old one. So, I mean, who's gonna determine, do we have the need for 2 arenas, like 2 ice surfaces?
I think that's part of their ask to the public, to the current facilities that are in use. Like where is there available ice time? Is it just that we have no ice time because everybody wants between 5 p.m. and 8 p.m. instead of 7 a.m.? So those are going to be the questions that the consultants are going to want answers to determine if we do really truly require twin arenas, or is it just that we have an overusage for a certain time that people want to have their skating at.
So then when you say, like, they're gonna look at, but when we say they're gonna ask, you're talking about them asking the municipality specifically what
Well,
it
it'll
is.
be the municipalities, like us and the surrounding municipalities. It'll be the user groups, like they'll go to the figure skating groups, they'll go to the minor hockey groups, they'll go to the adult hockey groups, the junior A's, the junior B's.
Will they break it? And the only reason I'm asking this is I would personally like to see, sure, definitely some opinion to what the user groups want to see, but then we also have to see the factual numbers, because I do believe for many user groups, you might ask if there is enough usage and they're going to say no. And it could be based on exactly what you said, because they're going to say no because they all want to use the something like ice between, 5:30 and 8. So they're going to say, oh, we definitely need dual. But if we find out from other communities that this is what's available, there's tons of it within that. Really, like, I'd like to see a breakdown that shows the difference between what is actually available based upon it coming from the municipality. And then
Well, and the other, like, other questions that they will find out, like, their questions and the way that they're gonna ask them will determine, like, if we can't, obviously, everybody's gonna want the Taj Mahal. Everybody would love to have $125 million recreation facilities with an Olympic-sized pool, dual arenas, the big jumbotron, everything like that. There's your Christmas wish list. Now, what can the community afford? And what can we live without? And that's where the breakdowns start in, okay, like, yes, the Olympic-sized swimming pool would be a bonus, but you know what? We just need someplace where we can do lane swim. It'd be nice to have 6 sheets of curling ice. However, we can make do with 3. Those will be also the information that the consultants will come back with.
Okay, well, go ahead, Councillor Curtis, or,
Thank you. I mean, just looking at the one, excuse me, from Lloyd, like, I would want to see some ideas if it's possible around the cost recovery side of things. I think that's important. I think the way things are built now, the modular side where we plug and or play, here's the modular pieces for this part of the recreation portion, plug it in, and again, we still want to have consultation with the schools as well if we're going to try and bring this together. So I think it is a big undertaking, but, as well as green initiatives, where do we lie if we push towards a green? Is there geothermal options? Can we get grant funding more so for that if we're doing a collaborative plus a green initiative? So I think that's all stuff that I would hope the people that do the study know, but that's things I would like to see in there, because it also, may be a bigger attractant to people coming to the town if they know we're pushing for some greener alternatives.
okay, Councillor Ruth, thank you.
You're looking for specific portions that we like from each of them?
Or specific things that council would like to see in this RFP. For example, like Councillor Curtis just said, he would like to make sure that they're coming to the table with green energy. Well, if we want them to come to the table with green energy options, we have to specify in the RFP that we want green energy options. So this is the conversation we're looking for.
Okay, so the Langdon proposal, some of the things that stood out for me in that one is the facility program components that were suggested on page 26 in particular, but also right at the beginning, it looks at other cultural partnerships and different usages within the facility, not just traditional large expense, large like a large visibility in terms of a rink or a pool, but making sure that every corner of the building has other offerings. And then in this proposal too, further on, it has, talks about the revenues and the expenses. So the anticipated financial implications and a costing proposal of what the human resources implications will be afterwards. So not only have you built it and you'll have an anticipation of what it's going to cost you, but if you build it with the capacity to be able to do X, Y, and Z, this is what the implications are in terms of your staffing of such a facility.
They even built in what would be reasonable for an operating grant from the county of Mountain View, which
It's genius.
that was nice.
Well, and
information.
Mountain View is one of the enthusiastic revenue, they've got, yeah. So they would be, I mean, it's a smart way to be able to build that in. Because I also think that's the other part of it too, like talking about your return on investment, recreation's a tricky one. So being able to find other ways of reducing the costs in terms of building it differently, but also having a projection of how you can potentially have a return on investment in terms of how you're going to use that facility differently. So I did like that. The one that is from Bonneville, they have a good scoping of percentages of usage. So not just talking to their partners, but also able to quantify. So making sure that they're talking to their user groups and actually quantifying. So I like that to be able to demonstrate, so then afterwards you don't have somebody coming back and saying, well, you didn't ask us. We're not pictured in here. You can actually demonstrate that there are a variety of user groups. This one's an outdoor facility, so it's a little bit different.
And the opinions on what the needs were sure changed once you got 15 minutes outside the municipality.
Yeah.
It was all negative.
Well, and I think that's actually helpful. The one thing that's will be different for us than Lloydminster, obviously, is we won't have the variety of selections for location of a facility. But I actually think that this is helpful too. If there's a way to be able to talk about the context and the site options. So we've done this kind of loosely when we talked about the location of the soccer park, but we don't have that quantified anymore. Like maybe there's a file somewhere, but when we talked about it, it was basically the facilities and rec manager at the time going around and saying, this site's available, that site's available, this is why we think it's useful or not. It would be nice to have it quantified, kind of in the center portion, like between 16 and 20, the site selector options that Lloydminster has, because then it can be used later on as well. So even if we don't use it for a recreation facility, we will have that data available to use for something else. Whereas in our situation, I don't know that we necessarily have some of that historical research that was done, the conversations that were had with our utility providers, because at that time too, we talked about where would it be easy to be able to put in bathrooms eventually. Obviously, there's no plumbing for the soccer pitch, but anticipating that again in the future, that it would be nice to be able to do some of this work once and be able to use it again.
Well, I think we're not that big of a municipality that we don't already know where two ideal locations for something like this would be. But we're not gonna talk about it, because what if one of them's privately owned, and next thing you know, that price may go up. But here's what I propose. Why don't we have an option number 3? I don't know if admin thought about this, where admin drafts an RFP and then brings it back to us, and then we have consultation. And then we send it out. What are you guys thinking?
Yep, I agree. Three.
So we're going with option 3.
Okay, and that's fine, we can.
So we know that we'd like to get this out as fast as we could. And we will await what you bring to us, and I'm sure that it's gonna be close to what we're talking about, what we feel. We're not all gonna get exactly in there what we all want, but I'm sure that we'll agree on what's best to move forward.
Okay.
Everybody okay with that? So we have this by Monday. Okay? Oh, pretty enthusiastic over there. It's what we love to see. Okay, thank you very much.
Thank you.
Next up, we have, from the mayor, letter from Community Futures. Mayor and council, it's time for us to plan our yearly event, which is known to everyone as Lemonade Day. I'm hoping we can work together to promote our young entrepreneurs. Community Futures Elk Island region is excited to bring this entrepreneurial program to Vegreville each year for our youth to learn and experience what it's like to run their own business. Community Future is keeping our request the same as in the past, and we hope to have your support in the following if available. Assist us in judging the process to choose the best tasting lemonade, best lemonade stand, entrepreneur of the area. Dates to be determined. Attend the wind-up to share with our young entrepreneurs what their experience was like and present awards. We hope to have your response at your earliest convenience. Do we need to, there's a little more that's asked of the municipality. There's gonna be the IP&D with the licensing, and usually we give them a little bit of facilities to hold some meetings in, correct?
Yes, correct. Director Lefebvre's department helps out with the business licensing, and we have in the past, they've done their a Lemonade Day meeting where they make the first batch of lemonade. We've done that at the social center.
Okay, so we'll bring this to Monday's meeting and work from it there?
Yeah.
Okay.
We can do that.
Okay, so, next up, round table, and we will start with Councillor Warwa.
I did not get one phone call in this last little bit. However, I guess the one thing I would say is I'm seeing lots more people out starting to walk around, use the facilities. So I think everybody's looking towards what our summer is going to look like. I know that some announcements have just come out with some of our summer students and whatnot, and a lot of it depends on what kind of a season we have, how much rain we get and whatnot, but it is nice to see people really out and about already on our parks and trails. And I had no phone calls, so.
Thank you. Councillor Bullock.
Pretty light for me, aside for, seeing a bunch of kids out in the streets ripping around on bikes and stuff like that. Just tell everybody to be careful and have a look out for the kids. They're shooting out from behind vehicles. I've seen that happen on my block already, so that's all I've got.
Councillor Barry.
Thank you, Your Worship. Well, I have had a few phone calls, a few texts, a few emails. I'll bring some of those up at another time. And part of it, I think, was a few people watching some of our council meetings, particularly the last one. And it might be along the lines of what Councillor Rudick was concerned about, the availability of citizens that might have some good ideas about the history of town. And the hope that Councillor Warwa shared with us, that she had discussions with some people. I want to first of all stop and give kudos and an appreciation to Patty Cucciari, who not only was a member of the former museum board way back in 1995, but was an individual who came to our first meeting here for the Historical Society, provided signature in order for us to get incorporated as a society, and was present at the second meeting, and had actually brought her son Tim along. And they have been talking with a few other individuals, and Tim phoned me yesterday because they have a group of about 8 individuals who are interested in the Historical Society, but they wanted to make sure I hadn't sent in the corporation certificate yet, to hold on to it a bit, because they would like to have a meeting, but they did have a question of myself, of council, as to whether there's any real sense in moving forward to try and look at Historical Society. They're pointing out that a number of the municipalities around us have museums that are only open for, say, the weekends, July, August, and it's through volunteers. And what they're looking at is because most of these also are run by societies that provide the volunteers, is council intent. They're a little confused as to when we're speaking of the museum is permanently closed, but we have said that we may display things in different manner or different venues. Is there any intent of council to maintain a smaller, downsized museum on the premises that they're at? If a historical society could get enough strength in the next while to be able to consider giving volunteers hours there, like some of the other municipalities where it's only open, like Smoky Lake, for example. In talking with them, they're run by a volunteer group, and they have the museum open on weekends of July and August and for the Pumpkin Festival. So I guess that's the question that was asked before they endeavor to try and hold a meeting and try and encourage more membership. is, would there be any opportunity for the Historical Society to be involved in some way or another with a museum in town?
Okay, thank you very much. Councilor Riddick.
I've had a few different conversations with folks. One I have to conclude tonight, I'm allowed to call between Jeopardy and the news. So if we wrap up here, I'll be following up. Not sure what's on that burning issue. We've not got to that one. But I wanted to share that Vegreville Learning Society that I've been appointed to from council will be having a job posting. Their executive director has been recruited to go back closer to her family, so she will be concluding her position and her role in June. So the executive director position will be available. And just to remind people of the variety of courses that they offer there, they've really ramped up the number of course offerings, and they range from art and prenatal classes, first aid and CPR for employment purposes, as well as AMA senior driver refresher course, and also English language learners during the daytime. So that's useful for those that are brand new to the community. There's also continuing education programs in the form of GED, which is actually called the Canadian Adult Education Credential, because GED is actually a US term. So just again, for everybody's information, there are a variety of courses that are offered just right around the corner, and they also do some skills training for people that want to drop in terms of being able to use different skill sets with using technology, et cetera. Just wanted to make sure that people are aware of that. And I had somebody reach out who is originally from the community and has at various times operated different businesses, was here the last couple days and was very surprised to see a lot of new features to the community. They haven't been here in the last year and a half, and they were really quite surprised and impressed. I mean, it's quite different to see things online rather than in person. And one of the things that they'd asked for on our website, and I know that it's improved a lot, is the ability to have, they like the ability of being able to see what land is available, to be able to see commercial land, residential property, and be able to have that GIS capability to be able to click on, like other municipalities, be able to see what the tax roll is, type in an address and see what the property might be worth, how much the taxes are, et cetera. And I know we're not quite there yet, but we've really got a lot of additional features on there. Anyways, they were quite impressed.
Thank you. Councilor Curtis.
Thank you very much. No phone calls or anything really, but maybe Director Stasky, just I've seen some buzz online recently about collecting taxes in June and why we do it. And I think you touched on it with the assessment review portion, but maybe just if you could give a quick explanation as to why we do this in June. I put you on the spot, I know.
Absolutely. So as you know, we collect taxes end of June. That is not uncommon for municipalities across the province and frankly across the country. Our municipal budget for 2024 is for the period of January to December. So it's no different than renting properties, et cetera. You pay rent on the first of the month, and we don't collect taxes on January 1st. We collect it midway through the year. If a ratepayer would like to lessen the burden in June, they can sign up for the monthly tax installment payment plan, and then you get to pay your taxes monthly. So you can pick the 15th or even the last day of the month. So that is, if you want to mitigate tax burden, I would recommend the installment payment plan.
Thank you very much, and that's all I got.
Councilor Lemko.
Thank you, Your Worship. I have a few phone calls. When will street sweeping begin is one call from a resident, so I to Director Lefebvre, if you have an answer to that particular question. Soon is good enough?
It'll be snowing in a while.
No, it was just an ask from a resident of street sweeping. Another resident informed me that there's a flagpole in the Rotary Rendezvous Park that has rotted off, and the flag is laying in the trees at the park. There's 4 flags, but 3 are only standing at the park here by across from ATB. And another resident called me about the leaves blowing around the long-term care facility that they have not picked up since last fall. And as try as they might, they pick up leaves in the yard and then some more blow in from that residency. So it's just a resident looking out for their property. This past weekend, the Hockey Alberta held the Prospects Cup trials in the community. I did attend to see the camp itself and noted the parking lot being totally full and the amount of people traveling from a faraway distance. So we're fortunate to have that Hockey Alberta come here once again to provide ice for those people. And it brings a lot of people down who have to stay in our facility, eat in our community as well. I did notice in the paper there was an advertisement from Atlas Carbon Storage Hub. It's a Shell and ATCO for the storing of CO2 emissions. They have an open house here on the 24th from 4:30 to 7. I believe they have a lunch at 5 o'clock, and the presentation starts at that time, where you can find out more information about what that project is all about and how it'll impact you as a citizen or as a resident of the community and the surrounding area. So it's good to be informed. They're providing an open house so that you can go there and gather information, and I hope to attend as well so I can become better informed. So that's all I got, Your Worship.
Okay, thank you very much. So I received a few phone calls. One I'll highlight is there was a resident who thought we were being unkind to PV Mart and their sale of chicken pens. And he would like to see the discussion brought up again with any municipality about having at least 6 chickens, no roosters in each resident. I told him how our conversation went last time we looked at this and how the person that applied for it and how their neighbors felt. Anyway, the conversation didn't go much further than that. He said he was gonna phone me back, but he didn't. But we also were away on a trip into Kananaskis for the Economic Developers of Alberta. And I just want to announce that our own Jameson Browning won the award as the Rising Superstar in Economic Developments in the province. Is it Rising Star or Rising Superstar? Because people use the word superstar a lot. Or is it rock star? Anyway.
Emerging talent, I think, is not to take the shine off of it, but.
But yeah, it was nice to have Jameson recognized there, and I know that we all talk and we realize that this new department that we got him the head up, and we're seeing a lot of positive feedback from that department. So congratulations, Jameson, on behalf of council, and just keep up the good work. So with that being said, we'll move to the director highlights, and we'll start with Director Lefebvre.
Excuse me. Thank you, Your Worship, and congratulations to Jameson Brown. I'd like to say that we work well with him at our development department downstairs, probably more closely than any other CED manager, for sure. We're just in the loop, always talking daily, every couple hours. So we like to be the best support we can for what he's trying to do, for sure. So I'll put a clap out to you as well, for sure. Deserved. All right, enough about him. Director highlights. Let's go to Prosperity Industrial Park, the lift station. It's at the point where it's ran its 80-hour test run, where it goes through cycles. We had some surcharge of water in the sewer system, so we're able to open up the valve, and as Prosperity Park, we let that go through. That's just from rainfall over the last couple seasons that has built up. And then we ran the pumps for an 80-hour on-off and checked all the level indicators. We have flight bulbs as backups to level indicators, and everything went quite well. Just a couple small things as you can expect. We ran the 80 hours and we pumped not even close to capacity, so about 73 cubic meters, which is about 16,000 gallons. So that was just enough to get pumps on, pumps off. We've gone through all the testing on the phase limiters, so if there's an ATCO power situation, that we're protected with 2024 technology, which we're using outside to simulate line loss and seeing what's happening inside. And it is very fast, so it's good protection for the system. So we are getting very, very close. I'm hoping by next week they're actually handing the keys over to the town formally, and we'll consider the commissioning complete for the lift station. And then I can notify Director Saskew as we then will throw our own insurance and things onto the building as it leaves the hands of the contractor. The exterior work is being done as it's kind of drying up a little bit now, but in the spring, summer, we still have deficiencies to do that are summer rated. There's some brickwork that has to be touched up, things in the building that we're not going to touch until we get some warm weather so things dry. So we'll do that. The shallows for Prosperity Park for on-site, that's the street lighting, the power, the gas, and TELUS. The agreement between us all has been executed. We are now moving forward. The plans were in for ATCO street lighting and ATCO electric. And then the gas and TELUS now will provide detailed plans to ATCO Electric, who's managing the program and the install. And now they'll work on submitting that with detailed information. What we have done is had the surveyor team that's going to subdivide the property, and they recommended this, was to put it on hold, just wait. They're ready to go, but they're gonna wait because they said they prefer that we put in the shallows first, or else they're just going back to replace monuments or property pins. And they said it always happens. They'll be back and just cost more money. If we need to subdivide one parcel legally, for example, we have that ability to do for an additional cost. They would come in and pin and register that for us if we had the need for that. Otherwise, we're just going to sit and wait until we get this done. I have, with this shallow services done, I've again reached out to Ricardo's been helpful with ATCO Electric to see now that we've got everybody on page, and he's getting information from ATCO Gas, TELUS. If we could get a timeline now, which I'm hoping for Q2 end of, or Q3 to complete, so we have the shallows in. And then right after that, we'll roll in the surveyors to knock the pins in and register everything. So it'll be a summer of things happening. The control of the soil in the property, we're going to be seeding the property with hay, basically, so that we can keep the weeds down and keep control of dust and erosion and things. And in the ditch lines, because it is a rural profile, which means we have ditches that water run through them, those will be grass seeded. And I'm hoping that the berm will be seed and hay as well. And if not, the worst case, it'll be in a grass form that'll just stay grass, which is fine too. So that's where we're at with the shallow install in the park. Yeah, and the draft drought management plan is not just being reviewed, it's completed, and now it's out for review. So that's parks with their watering of their green spaces and things where we get water from. We're registering now with Alberta Environment because obviously they don't want you pulling water out of places like sloughs or mossy areas or anything that inhabits that type of species or wildlife, but you can register for dugouts, borrow pits, engineered stormwater management areas like North Parkway, for example. So we're working on that, and they're giving us 6,350 roughly cubic meter draw for this coming season, and that's like 1.3 million gallons. So we're going to be all right. We're just working hard. It doesn't go as fast as you like to sometimes when you're trying to register these things and get going, but we're working towards it. So should we need it, we'll be able to just to go do it instead of start looking for approvals then. And if there's any questions on any of that or more detail.
Any questions? So Prosperity, we won't see any addresses till September, October?
Well, yeah, there won't be addresses registered to land title till then, yes.
Okay, and any other questions? Okay, thank you very much. Director Saskew, what about your highlights?
Thank you, Worship. I have some highlights. So obviously, our audited financial statements will be going before you at council. So there still is a little bit of homework to complete before the end of April. So May 1st, our 2023 grant reporting is done. So now that the audit is wrapped up, so to say draft draft statements are ready, we can complete, they're called SFEs, which is the statement of funding for each of our grants. So MSI, GTF, we have to do all of those, as well as the MFIR. I know a lot of exciting acronyms here. So this is the Municipal Financial Information Return. So that is also due for submission on May 1st, which is also vetted by our auditors. So those are the two things I'll be completing this week. Just working through with the hours that I have and the childcare that I have. Otherwise, Mia is in tow with me. And then also we're dealing with some vacancies upstairs. We're faced with another leave with our accounts payable clerk right now. So hopefully some of this can be mitigated with the summer students start in early May. Right now we're just getting by with what we have and doing the best we can. One other update I have is on the Canada Summer Jobs. So the funding is significantly decreased this year. So we're getting in total $10,500. Prior year was $23,100. And the year before that, we were in excess of 30.
Yeah.
So this sounds really bad, but prior year we had 11 positions at 16 weeks each. This year we're notified that we've gotten 5 positions at 8 weeks. So a huge hit. We did have the $30,000 in the budget, so there is the $20,000 difference, but overall the accounting or the summer student positions are still funded as expenditures in our budget. So we can still hire our summer students, but we're getting less Canada Summer Jobs funding than what we've had in the past. So quite a significant loss. The prior year was even I think it was in excess of $10,000 change. So down quite a bit. And that's all I've got right now.
Wow. Downloading federal responsibilities and just keep cutting types of funding.
And we asked whether we thought there would be a change for next year, and it doesn't look like it. So I think there's going to be similar funding levels, but the only thing I would warn you is that they do not give us any notice ahead, so there's no way to tell the municipality if they're going to be cutting. We don't actually find out what they're going to allocate till that final list comes. So unfortunately, it's going to be short notice again next year.
Terrible, just terrible.
It is.
Okay, CAO highlights.
Actually, it's been pretty busy, but mostly with meetings and stuff like that. But I attended the MDP open house. It was an interesting evening. There was lots to learn about what goes on here. As I stated last Monday when we passed the policy, I spent some time with the library manager discussing full facility bans with her as well. And I've been doing some research on Bearland condominiums and helping staff prepare for the May 1st townwide safety meeting breakfast and summer student orientation. So there's been a few things that have been taking up some of my time. And Councillor Lemko, I got a text from facilities that flagpole has been fixed. And that's all I've got.
Okay, thank you. So some upcoming events. Thursday, we have Elk Island Public School Board meeting in Sherwood Park. Who's all going? 2, 3. From work? Yeah. All of us are going. Perfect. It's on Y Road. Do you know where their office is? I do believe that's their office that we're meeting at. It's their boardroom, yeah, at 683 Y Road, Sherwood Park. So I think we're probably, Councillor Bullock will be driving in from his employment where he works, and the rest of us will all be from leaving town here.
I potentially will be driving from the city, but I'll know by tomorrow.
You're gonna be in the city?
Yeah, I'm working in the city on Thursday.
Okay, so it looks like 1, 2, 3, 4.
Yep.
You're coming. So we'll put 5 in the truck if you guys are good with that.
I could take somebody home with me.
Okay, so, it's at 5:30, so if we leave here at 4:15, is everybody good with that? So can we just meet here? Or do you want me to run around and pick you up individually? What? Okay, I'll pick everybody up. We'll be here. I'll pick everybody up 4, okay? And then we'll be here at 4:15. Excellent. Okay, is there any other business of council? Seeing none? Oh, you do? Oh, I thought you were gonna say something. Oh, you looked excited there. I was like, whoa. Okay, adjourn this meeting at 5:04.